Well, good morning. I'm standing here reading stuff and not paying any attention. It's 8 o'clock in the morning, Central Standard Time. Welcome to Risk Neutral Trading, my virtual journal, trading journal. This is not for financial advice nor trade advice. There's a disclaimer in the description, the usual stuff. All of the times that I refer to and that are on the bottom of my chart here, or in my monitors or my windows, are all Central Standard Time. I'm not monetized in any way for this stream. And so likes and subs are super, and I'd appreciate it. But the point is, and more importantly, or as important, I guess, is participate in the chat. That would be nice. It's a lonely sport here, trading. The idea here is to provide full accountability and transparency. The stream let me just see what I'm looking at here. Okay. Making sure everything's under control. The idea here is that I see what I'm looking at and record that in the video, obviously, and then my voiceover gives insight as to what I was thinking about. And so that when I review this stream, I have the full picture. I have a very strong, definite commitment not to take any trades in these accounts off the stream, so it provides, zero to hero record and complete record of the entire process. That's one of the reasons why the stream is so long. It starts now at 8 o'clock in the morning with the pre-market and these things that we're doing right now, and goes all the way through until the cash close at 1500 today. Let's get on with the numbers here. We are actually more or less back to some normal kind of numbers today, which was refreshing. We had PCI. We have Chicago PMI coming up here in a few minutes, top of the hour, and quite an important one is the Michigan inflation numbers. They are, and consumer sentiment. These are numbers that are not typically listed as a 3-star here for some reason in investing.com, but certainly have the potential to move the market. This is investing.com, which is free. I like the presentation of the reports. You can also look at earnings, which there are none today, but you can see how they do that, and I like that as well. This is free. This is Financial Juice, which is my other news thing. Relatively newer. I've used investing.com for 10 or 12, 15 years maybe, and this is a newer one. And it's got a similar reports here and numbers, but it has more of a squawk box approach over here. This is just, and here's an example of the random, unrecognized potential critical risk that we're in, that we face frequently now, which is not typical. This in this case is Trump himself and some of his other cabinet people there are pretty fond of microphones and cameras, and we don't know, I don't think anybody knows particularly what they have in mind to say, and we, from experience, know that it can be market moving. So it's got nothing to do with politics, it's got to do with trading. And in any business, you want to manage your risk or identify it and make a mitigation plan. If you can't do that, it's an unrecognized critical risk, and that's what we have at the moment. So let's move on here to the pre-market. So remember, we got news up at the at 9:30-ish. This is IRT. This is the E-minis and the NASDAQ mini. My longer term micro composite chart and the E-mini market profile. This is the full session, by the way. So here we have the overnight session. Pretty light volume, 115,000 shares. This was yesterday's RTH. What have we done today? Well, we are definitely 100% short inventory. Here's our open. And we have traded below our open all night, which means this inventory is all short. What would I expect? I would expect some profit taking, so a bit of responsive buying. We have had a little so far here this morning. I would expect some responsive buying, and then because this is Friday, this is the end of the month, the end of the week, and we are going into a 4-day holiday. Remember, Monday is Labor Day or Memorial Day, whichever it is. I think it's Memorial. I always get them confused, but it's a holiday for sure in America. So you could expect extremely light volume today. You know, everybody that's got a decent paycheck is headed out for the weekend, I suppose. So there we have that potential. This is the NQ, similar overnight activity. And this is the higher time frame micro composite chart, which is the ES. It is a daily RTH session chart. And these are daily candlesticks or bars. They're candlesticks, they're not bars. Whenever, wherever price overlaps, I draw and continue to draw a volume profile around them. And in so doing, that generates these high and low volume nodes, which are the red and green lines, and the micro composite VPOC. Of course, we just got new all-time highs yesterday in the ES. And one quick note, this black line volume profile is the total chart data, and that goes back, that's for the ES. This says ESU5. Obviously, you know that U5 is only, 3 months long. And this is the ES continuous contract. Currently, the U5 starts back on October 27th of 2021, just before the pandemic, or I guess in the pandemic. All right, so this is our basically current quote page here, where volume's 116,000 since 1,700 last night. Everything's red, which means that the current or the last price is below settlement. That's why things are red. We're down 0.25% change so far today. The session prices here are also pushed to Bookmap, and they look like Bookmap. Now, the way this works is, first I try to keep all the data that I think is important to trade right here visible to me on the hard right edge of the screen. Boom. This is the dome. This is my micro composite column, which you see the levels that I've entered manually myself, including the all-time high from yesterday. And I encode the date. This is the 15th of August, 2025, and this was put in the ETH. I'll talk about that later. And my workflow is that once a level has been revisited, I change the text from whatever other color it is to black, so that I know that it's stale. And then on the weekends, typically I take them off. This is the high and low volume node. This pushed from to Bookmap for my RT. This is the full session volume profile, not the ETH, but the full session. So far it's the ETH because it started last night at 1,700, but it will continue to plot through 1,600 today. And today being Friday, that's as far as she goes, baby. And then it'll be a holiday on Monday, and we'll be back at it on Monday night when the ETH session opens. So there will be I will have no data pushed from, typically I start my data and all these levels at 1,700 on Sunday. I will not this week because I don't like these short abbreviated holiday days. I scrub them. This is the RTH session, which will be reset at 8:30 this morning. And this is a pretty important column for me. This is my notes column. And the first thing I do is clear the notes from yesterday. You see the statistics and all of the price, migrations, etc. Now, the next thing I do is determine the open type, of which there are only 4. And then I change the title of the column to the open type so that if I review a stream or a screen snap, I know immediately a lot of data about the day. How do you determine the open type? It's really, as with everything I do, straightforward, pretty simple, data or statistics driven. If we opened right here, right now, at 6,500 and a quarter, where would that open price, how would that relate to the previous close, which is right here? That's lower than the close. And how would it relate to the previous range, which is previous low, and up here is the RTH high. It's within range. So the open type is going to be lower in range. And yesterday we were higher in range, and guess what we are today? Lower in range. There we go. Now, if there's a question about that, here's yesterday's RTH session. Here's where we're trading now, and here's where we closed. We're lower than the close. We're within range, lower in range. Real simple. The statistics then, well, let me get back. Let me stick with this workflow here. These are the price level, the session prices as pushed by IRT to Bookmap. There's nothing mysterious or magical about any of these, though a lot of people would have you believe that. The POC there, and also there are no indicators on my Bookmap or my IRT. There is a POC for the full session and a POC for the, a POC for the full session. This is more muted yellow, and the RTH session is the brighter yellow. What is the POC? It's the price at which the most contracts have traded so far in the session. That's all there is to it. This is 3306. That's the POC for the full session. The very second that this level up here, or any level, is 3307, this yellow line is going to move there. That's all there is to it. And that's going to happen pretty quick as we speak because we're trading up here right now. Now we're at 3240. We're at 3306. Wait till this moves a couple and you're going to see this yellow full session line, POC move up here. That's it. This is the VWAP for the RTH and for the Globex and the RTH. And the VWAP meaning volume weighted average price. That is technically an indicator because it's calculated. Okay, call me a liar. This is the mid of the RTH session. Pretty obvious what that is. And the only other lines that could be a little confusing are the IB high and low, which are these two green flags and lines. And the confusion comes by the name, which is IB stands for initial balance. It's an old market profile term. But in reality, these two levels reflect the high and the low of the first 1 hour of the RTH trading session, period. Nothing more, nothing less. So another thing I do every day is flag, the location of the most recent POC for the RTH, most recent RTH auction. So this is, what is this? This is 280825. Okay, this is where the POC was when we closed yesterday. It cannot be auctioned because we haven't had another RTH session yet. So there we go. Statistics now. Also simple. Derived from this study. Here we were yesterday. IRT conveniently highlights the correct open type, but only after the open. We're going to be lower in range today. The way the study works, it looks back at 2,000 trading days. Of these 2,000 trading days, we opened lower in range 590 of them. Of the days where we opened lower in range, price revisited the overnight volume point of control 84.1% of those days. Overnight volume point of control. There we go. The POC just migrated. Am I a wizard? Am I magic? Did I foretell that future? No. It's statistics. It's price. It was 33.06 and now it's 34.36. Boom. This line went up there. That's it. It just marks the price at which the most contracts have traded so far in the session. This developing volume profile, our POC line, is handy because it lets you know which way price is which direction price is moving and being accepted. That's all there is to it. Moving back to our statistics now. The next order of business is the overnight mid, and that's 83.2. And now we have to change this because the EVPOC shifted up, right? And the overnight mid is right there, and that's 83.2. And I just go down the list. Oops. The next one will be the previous close. And the previous close is 73.6%. And where is that? That's right here. 73.6. There you go. Here's one I'm looking for, the IB high, 70.3. Okay, this is the IB high from yesterday. So let's go. 73.6. Is that what I said? Yep. No, 70.3. Boop. Now, I then type IB, B high. Why do I do that? Well, remember, the IB high and low just mark the high or the low of the first 1 hour of the RTH trading session. So the minute we open, this flag is going to move to the high of wherever that is, and this will be marking the low of wherever that is. It will no longer be here. The probability of that's pretty unlikely, I think. So by putting the initials there, I know what that 70.3% represented. So I don't, later in the stream go, what the hell was here at 6508? Now I know. What else? We have a previous close. Overnight low is 67.1. Ooh. There you go. And what else we have over here? IB low, I'll worry about that later. Overnight high is 52.2. And that's got to be right underneath the hair, so that's kind of disappointing. Overnight high is right under settlement here, so I'm going to put that up here at whatever I said it was. 52.2. There's no statistic for settlement, by the way, in my study there. And now I'm going to mark that IB low because we're lower, right? So it's 67.1. And where is the IB low? Well, it's the green line right here. And it was the previous RTH low. So it is going to be 67.1 IB low. Okay, that ought to be enough statistics to confuse me. What have I missed here? Value area low, what's that? Where are we going out for that? Value area low is 69.2. Let me differentiate between value area low and developing value area low. The developing refers to the current the current auction. The value area low and high refers to the previous auction. In this case, it is the RTH from yesterday, and after we open, I'll adjust my charting in IRT so that it remains reflective of the previous RTH from yesterday. Okay. That's got to be enough, I think, for now, for the purpose of the stream. You see that the flag title was in, the statistics are in. We've got everything over here, and now we're going to do something that I do every day, which is the TLab snap. And what is the TLab snap, you ask? The TLab is a bookmap Discord chat room. Why didn't that work? So the TLab is a bookmap Discord chat room, which was started by a guy named Tom B. And it is completely free. You don't even have to be a subscriber to Bookmap to take advantage of all of any of the resources or whatever else happens to be available there. Tom is a professional trader, going on 46 years of trading, and I believe he's the real deal. Every day I post I used to be quite active there, but I'm focused on the stream, so I try not to be in it. Chat rooms there's kind of a turnover in people that do a lot of talking. Anyway, every day I post the reports around 6, and I post this snap at about 8:20, which started years ago to give people who don't have similar kinds of charting an idea of all of the potential levels that they might be interested in leading into today, ahead of today's trade. It is, as I said, free. It is a bookmap. You do have to join the bookmap Discord server, of course. And then when you get there, navigate to the Traders Lab Tom B right there. It is what am I doing now? It is something. I'm trying to talk and I can't seem to get it straight. As I said, it's completely free, and importantly, you're never going to be solicited for anything, which I think is huge in this day and age, as is, like here in this stream. But and I don't recommend any other bookmap Discord site, because I certainly there's a lot of them, and I certainly haven't been to the chat rooms except for 2 others, and they were much more normal. The second word out of the guy's mouth was trying to sell you something, which is perfectly fine. And it's perfectly fine if Bookmap wants to support that, but I'm not interested in it. And so I don't honestly recommend that. I think Tom genuinely has an altruistic point of view in that he wants to give something back and help traders get better. He doesn't trade live. He doesn't call trades. He doesn't post account data or whatever. And I'm sure you're never going to see a wrapped Lambo or gold chains. But I do believe that he's got the experience he says he has, and that he makes and that he is successful at his trading. Whether his real trading is representative of the more simplified approach that he puts forward with vetting trades, and he approaches it the same way I do, or I should say I align with him. that trading as a business of trading as a business is a business of statistics and probabilities in a random market. And you should vet your trades and let the law of large numbers manifest to your account. I'll talk all about that later. But anyway, here we go. So now the next important part of business here is to be able to trade, I guess, isn't it? And in order to do that, you need to activate the trade control panel in Bookmap, select a method that you will use to interact with the application to trade with your mouse. If it's chart, the only place you can trade is the active data column. DOM, only place you can trade with your mouse are the DOM columns, and both is, guess what? There you go, both columns. I use multi-brackets, and this is the risk-neutral package. This is the smallest risk-neutral package available because you need an even number of contracts. This is the methodology my whole site and my trading is based on. So you select the minimum size, which is 2 contracts, and you determine your stop size for the entire package. And you determine that first, taking into consideration your risk appetite, your account risk parameters, understanding that a trader's primary directive is to maintain and protect their account. So however you go about it, you pick the stop ticks for the entire package. Once this is selected, the first risk-neutral scale or profit target is automatic. It's for the same number of ticks as the stop is a loss, same number of ticks positive, and it's for half of the package size. Then you have the runner. The key to this is the minute this first take profit target is achieved, the trade is risk neutral. The worst you can possibly do is scratch. Unless you move your stop away from entry, then you've broken the entire system and you have bigger issues to deal with. A 4-lot package, very simple. Same thing. 4 lots, 12 ticks, 2 lots, half the package, 12 ticks, split the runners up. It's real easy. You can do the same with high volatility, whatever you want to do, however you want to approach it. And if you want to, if you have 100 lots and 50, there you go. But anyway, and then the next thing I do is activate this multi-account trading thing, which is why it always does that. I don't know. And there we go. So we're ready to trade. And the final thing I do is confirm the package size. Notice that these data points are represented right here. So what I can do now is click this again. It stays active in green, but I get the real estate back and I have access to the same data points. Cancel all, cancel all and clear all or close all. There you go. We're ready to trade. And now let's have the open in a minute and a half. And I'll squeal like a pig because this, for some reason, this column is not resetting properly. And that's so frustrating to me. But hey, I think I got it all covered here. Let's check. Yeah. Got about a minute and change. I'll be right back. Oh, here we get ready to rumble here, boys and girls. There we go. Now, this should have automatically reset immediately. I was able to catch it with my double click. Get out of here, whoever you are. And I will start flagging my composite migrating VPOCs. And this is not as important as it once was. It's kind of a holdover for me. I used to keep my heat map or my chart zoomed in where I could see all the individual price action more specifically or in greater detail. But I have now taken on a new facility or a new idea, which is to mark the beginning of each session with this blue line, a blue line, vertical line. And what I do then is keep that vertical line. It's nothing more than a visual reference for me. As long as I can glance left and see this line over here on the left edge of the screen, I know that I have the entire context in view. And that's my goal, because I want to always be vigilant to be aware of the current context of the market. I think a lot of traders, myself included, you get screwed in way too tight. In a program like Bookmap, a Dome, they focus you in the minutia, which, you know, Jim Dalton says if you trade on anything less than a 5-minute candlestick, he prefers market profile, which is our 30-minute brackets, and you use a Dome or you use something like Bookmap where you can get screwed in, you have given yourself cognitive dissonance, and it's a giant mistake. Now, that's Jim Dalton. But that's out of his mouth. I've actually heard him say that, because I did a training with him one time. I don't know why that refuses to be where I want it to be, but it's kind of annoying. And this is just me being an anal nit-nat OCD. This is my OCD shining for you. Doesn't matter at all if I'm within a couple of seconds of this, but it's irritating, right? To hell with it. So you get the point. And I also try to keep, you see how we're 50 cents wide here? Or 50, I should say 2 ticks, because these are not dollars. These are points. Wow. That some bitch is tight, huh? So there's a point high. That means every one of these price levels is 1 point or 4 ticks. So when you look at it in that context, look how tight this is. There's the IB high marking the high of the first 1 hour. Here's the IB low marking the low of the first 1 hour. And here we are fluffing around here. So the point, I'm not sure I finished making it, was when I got all distracted with obsessive compulsive behavior on that blue line. I used to rely heavily on these migrating VPOCs because I couldn't see the full session, and I wanted to know where we had been with the point of control. Now that's not so important, but old habits die hard, so there you go. I'm now going to widen this out, because 1 point wide here, well, let me rephrase that. I was going to say it's pretty zoomed in. It's pretty, condensed, but this is really what's happening in the market. Does that look like an opportune-rich environment for you to trade? Look, these are only 1 point high. My risk-neutral trade, first risk-neutral scale is 3 points. Obstacle, 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 obstacle. I mean, there's no way that you would be trading in, this is a market that is 97 to 52, 497 to 52. That's 4 handles wide so far, Yeah, 5 minutes. But some of these guys that are clicking and banging around, you know, in those first opening swing trade and all that kind of stuff, not me. I see no advantage there or edge there. What I see is a giant helping of risk retail soup. Now what I'm going to do, I should have shown you this. What I'm going to do now is change my session plotting chart profiles here in IRT from full session to day session. Now this will disappear, and there we go. So here was our overnight that's now gone. Here's the day session that ended yesterday, and here's our new one. Why do I do that? Well, circle back to the conversation about the value area high and low. And also, I forgot to mention probably, I plot the same configuration exactly in the micros and because I push the levels, the session prices stuff for both. Freely and happily, you know, a lot of people use them. I push them for free. No problems. Come on. There we go. And as soon as I get this done, you see how well I multitask. Back over here. Okay. Hard to even see. Value area high. This is developing value area low. And here's value area low. Well, those folks who use my session prices, which start at 1,700 on Sunday night and go through 1,600 today, Friday, 24/7 live, and live. They expect the value area low to represent the previous RTH session, and the developing value area to represent today's RTH, the current RTH auction. So that's why I do that, because the moment we opened, the value area correctly representing the previous auction would then be representing the just ended ETH. So that's not any good. I don't like that or use that. And the people who rely on these and use these levels, price levels, of which there are a lot, don't expect that to be the case. Now you see how we're moving here. Here's the flag down here, and here's the line up here. Let me point out that that's not an error or a bug. It's a characteristic of Bookmap. Now they're even. This data is pushed exactly, instantly, real time from IRT, and it's the same exact data for the flag in the cloud, which is the cloud note column, and this indicator. But the smallest refresh time I'm able to set in the cloud note column is 1 minute, and whoever coded up this indicator, which you buy from Bookmap, if you choose to, obviously set it up differently and probably more frequently. So these can get out of whack. Nothing to it, and they always realign within the next few minute anyway. Okay. Now what? Well, we haven't taken out the overnight mid, which is or overnight VPOC, which is the highest of all high levels. We're pushing the IB low. We've got a real tight range balance, and we're at 93 to 03, so we're about 10 handles there. Remember that these are 1 point increments or 1 point high. In other words, between each one of these is 4 ticks. We have our session marker going on over here. Look at this big sell volume down here. Doesn't look like much there. These volume dots, by the way, are colored by delta. Obviously, there's buying and selling at any level in futures because the nature of a contract means for every seller there is a buyer, and for every buyer there is a seller. That's a fact, Jack. There's never a situation where there's more buyers than sellers or the other way around because it's a contract between one of each. Remember that. But they're colored and the market moves because of aggression. So that's, if sellers are more aggressive, they come across the inside market and hit the bid. Down we go. If buyers are more aggressive, they come across the inside market and lift the offer, and up we go. That's why they call it lifts the offer and hit the bid. Anyway, that's my story, and I'm sticking to it, so there you go. Welcome to the chat. If you're just smoozing through here or lurking, thumbs up, subscribe, send money, but, more importantly, say hello. Where are you? What's going on? Drop something in the chat. You agree, you disagree, you think I'm full of crap, up to you. Remember that this is my virtual journal, and I am talking to myself here. I'm allowing or welcoming people to look and listen over my shoulder because I'm interested in accountability and transparency. I can't bullshit myself or you because here we are, alive and direct. You hear my voice, you see my screens. Pretty hard to lie about it. Not that I do that. Fortunately, I may not be a whiz-bang trader, but fortunately I don't suffer from some of the more typical self-control, willpower-y kind of problems that some traders do have, suffer from because they tell themselves that, I believe. But anyway, I don't overtrade. I don't revenge trade. I don't succumb to FOMO particularly. So, but it's important for me that this stream is completely transparent and accountable. And there is a full record recorded. And the reason I pushed to YouTube, by the way, is because these are stand-up desks, and I stand here. The stream is roughly more or less no less than 7 hours every day. And so it's convenient for me to be able to review the stream on any device, which Bookmap enables. If I just used OBS to record it, Bookmap has a phenomenal recording process where it records every tick, every price movement, every order, everything. So you can replay it and review it. But there's no voiceover. The voice here, my voiceover, gives insight as to what I was thinking at the time of a trade or through the day. That's the reason for, and then which is recorded and captured by OBS. But if I didn't stream it, I would have to be standing here to review it. So, and I don't expect anybody, including myself, to listen to all 7 hours. So I keep a pretty extensive, there's an add-on that I've got, which is chapters in OBS, and that continues through the day. And then at the end of the day, when the stream is through, I put those chapters into the description, and comes the timeline on the bottom and all that stuff. And if you want to search by date, I hope this works, actually. I need to try this weekend. I've started encoding in the title of each stream a couple of dashes at spaces at the end, and then a pound sign and the date encoded the way I do it, which is down here, month, day, month, and year. So if you wanted to know, whatever day the last FOMC was, you should be able to just search for that. I hope that works. Best laid plans of mice and men, I guess. Remember, it's a light day. I'm relatively certain. Last week, full week of trading week of the year, of the month. Friday going into a long holiday, 4-day holiday, 3-day holiday, whatever it is. And seasonality wise, these are the last of the worst 2 trading weeks of the year, apart from the Christmas New Year, which are obviously in 2 different years, but here you go, the trading year. In terms of liquidity and, follow through and all of that stuff. It used to be that, looky there. Now we've got some reports coming up here. Let's be aware of those. Well, the Chicago PMI just came out at 8:45. Not much reaction there. And it was a miss. Substantial miss. Ooh. Wow. Forecast, previous was 47.1, forecast was 46.6, and actual is 41.5. Goods and trade imbalance is also a biggie. Big miss. That was at 7:30. And yet to come is a number that it doesn't usually, it'll be at the top of this hour, is the Michigan consumer confidence. For some reason, investing.com always keeps it at 2 stars, but it is definitely a market moving potential. And you'll see over here that they haven't updated this yet with the consumer. You'll see that that they have it as a major or red lightning bolt or whatever they use. This is thing. Financial Juice. The other is investing.com. These are my 2 news sources, and both of them are free. So you can take advantage of them. Of course, if you want to pay, knock yourself out, but you don't have to. Let's put it that way. So we have the top of the hour news at the top of the hour, a big number. And here we have some icebergs. Let me get on the right screen. Got some icebergs building up here. 10 lots, 150 lots. You see how the iceberg went in here and then it trails along until it starts to trade out. That's kind of handy. 625 of them down here that traded. This is stops. I don't have all the sweeps, and you can have it so cluttered I can't. Let me start over. Bookmap has a lot of different tools, and some people use them. Tom in particular posts sometimes screen snaps in the TLab, and he's essentially contributing his time, whether they pay him or not, I have no idea, to Bookmap. And remember that the TLab and all of those Bookmap Discord areas are a marketing tool for Bookmap. You're never solicited to subscribe or to buy anything in the TLab, but that's the point, isn't it? I mean, they're not doing it because they're so driven to help traders. They're doing it to make money. Okay, it's a good product, a good tool, good support. I am not bitching. I'm just saying be aware of the fact that it's not an altruistic endeavor, a charitable organization. They're a for money deal, for profit. And Tom is basically a spokesman for Bookmap and all those things. So it makes common sense that in the streams, at least, he shows all the bells and whistles. And she says, I don't even remember what they all are, but there's a lot of them. And you can have a bunch of crap down here at the bottom, which I've shut off because I realize I don't ever look at it. break even, which is graphically displayed up here. I don't need this down here. The CVD, volume divergence. There's actually a column you can have, a volume column that basically shows that. I don't pay attention, and there's a whole buttload of other stuff you can have in there. I keep it shut off because I'm more concerned about real estate. There are, we've got a number coming up. There's all of the stops and icebergs on the subchart, the chart, break even, liquidity tracker, market pulse, stops and icebergs on the chart, sweeps, lots of stuff. I've removed a lot of them because I didn't want them accidentally. Sweeps indicator, absorption indicator. I didn't want a lot of this stuff happening. And also, in addition to that, you notice that I keep it black and white and very minimal. You can set it to all of these different things here. The most colorful nanny in the world is this thing, and you can make it, you can set the various levels and all this kind of stuff you want. The volume, the balls down here, let's see the dots, where are they? Let's make them 3D. See how they become 3D here, and they're all groovy looking and all that stuff. It seems to me that 3D volume dots has just taken computer power computational power that I don't care about. I'm perfectly happy seeing them 2D. And what that means is all these represent is the delta. They're colored by delta. So here's buyers and sellers. But the buyers, were the more aggressive, and it's colored by delta. And there's all this other stuff you can do. So I don't do any of those things. And now I'm pissed. I can't, what I have done is include the legacy color heat map, which gives me a real black. And that's how I like it. And these gradations down here, or these highlighted areas, represent resting liquidity in the book. I wish I had a screen snap of one of Tom's screens or someone's screens for you to show here in comparison. I can't even see the price line. And in my case here, you can also have bid, ask, and close. This is just the closing price. That's all that line is. You can have more stuff going on than I can keep track of. And I'm not saying there's anything wrong with that or anything. I'm just making a statement. For me, it's confusing and, doesn't help me. I will say that this stream is my virtual journal, remember. I'm talking to myself, and this is very definitely not intended to be a my way or the highway thing. Any way that you can trade and be consistently profitable, do not change no matter what you hear from anybody else. I mean, if you're putting a calendar on the wall or a price chart on the wall and throwing darts at it, turn off the screens and throw darts. What can I say? This is what I'm doing and what I believe makes sense to me, and so far has been kind of okay. And that's where we are. So we got 6 minutes until the Michigan numbers. We are trading lower. We had no responsive buying, I talked about in the pre-market. And we're just now trading right down to pretty much, well, here it is. Here is our previous RTH low and the previous low from yesterday. So there you go. And we have a naked MVPOC down here below us from the 26th. It's about 68.5. MCVPOC. Yeah. They've widened it out to about 20, 18, 17 handles. And what is the context? Why do I have the blue line? What's the context? Well, is there any question in your mind which way the market's going? Down. Look over at the Renko chart. Down. NQ. Now NQ's down and a little bounce up here. One of the things that it's worth commenting about probably now in this, when I was mentioning the lightest, least liquid week and all those things, low liquidity can be a double-edged sword. It can either be the most boring thing on the planet, like 2 or 3 days ago, where we had I think we traded 180 or like 80,000 contracts all day, and it was within a 10-point range or something stupid. Or it can be like the NQ, where very little input, or some market moving input can have a dramatic effect because there is very light liquidity. So it doesn't take much size to move the market in a substantial direction. Look at this. In resting liquidity, what do we got here? We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Got 10 levels here under 100. If somebody throws an aggressive sell in here of 1,000 contracts, they're going to take out 10 levels of price. That's called a liquidity vacuum, that as opposed to a stop run. And that can happen in a light liquidity. That's why the NQ is so volatile and moves so dramatically through the day. We've taken out now a whole bunch of different levels here. We continue to chug lower as we approach 2.5 minutes to that number. Whether that's going to have any effect or not, who the hell knows? Oh, something else I wanted to say before we get there. Let's look at the volume. This has been pretty interesting lately. What's going on here? Okay. Well, we're up. Come on, get away from here. 103% volume as of this time of the day. Yesterday was about 90 here, then it dropped down in the 60s, got up to 70, finished out in the 60s. Here's our ATR, which yesterday we started out up here around 11, almost 12. Today, look at us. Way down here, 1.8, and now we're up. And this is contracts, right? And this is the ATR, average true range, for every one of these bars here. Okay, well, there you go. There's a tidbit of probably useless information for you. And a couple minutes here. Minute and a half or two, I guess. You'll notice in my stream that the video are the monitors, not the window or the application. So you can see any program that's open, and you can see the time to the second and the date to further the transparency and accountability. Okay, come on, let's go. Here we got 30 seconds. Let's do some here. This number could be a complete, total nothing burger. We've now taken out, I think I have my MCVPOC incorrect. If my micro composite is accurate, we'll look in a second here after the number hits. And remember, I am just a spectator here. I am vetting my IB trades, and I'll get into that in a minute, but well, that's about a nothing burger for the Michigan number. What have we got? We got a 6 to 82, so we've got 6 handle swing on that number. Said stop doing that. 58.2, 58.6. It's a miss also, but only just. And this Fed's Cook hearing is pretty incredible. They got that going so fast. Starting at 9 also. And no other reports or speakers, which is deadly. I talked about unidentified critical risk, I think, in the pre-market. Not to be political in any way, but we have a situation with this new administration where several of them are real fond of their own voice and cameras. Specifically Trump, actually. And I mean, that's been his history since, he got his big TV break on reality TV with The Apprentice, and he's loved it ever since. Again, nothing wrong with that, but we've never had a situation where this is the president and the cabinet. When there is when there's nothing scheduled for them to talk about, that's an unrealized critical risk, because it should be real apparent to anybody in this environment that one of them can come on anywhere, CNBC, Fox News, wherever else they speak, I don't know, I don't listen, and make some statement that knocks the market for a loop. The university numbers are bad across the board. So, like I said, it's not a political statement or, anything else. It is a fact. And if you can't, identify in advance a potential risk and mitigate for it, you need to really be aware of the fact that any input you have with the market, or any time you engage with the market, you're putting on risk, right? And that is real important. And again, not political at all. It's a fact. If we didn't have, and I'll make this example. First of all, look at us go. We've now migrated 1, 2, 3 times. And there are those out there that are trading the VPOC migration. And looks great today, doesn't it? My worst setup. Antonio's around. This is his favorite. He's got the same opinion I do. But now look at how wonderfully this would have worked out today. One of the rare instances. VPOC migration. Test up, down we go. VPOC migration. Test up, down we go. VPOC migration. Test up, down we go. Wow. 3 beautiful instances of the VPOC migration trade, which is a setup from Tom, I think. So there you go. That's typically not my experience with that setup, but it's sure working out today, like in spades, isn't it? Well, that's great. And I'm sure there's a bunch of traders that are watching for that and taking that, and good for them. That's great. I am in the process of vetting the 2 IB trades, and I'll talk about that in a minute. But just finishing off on the unrealized risk, if you're in a business or project manager or anything else, after you've initially set your timeline and you've got your resources lined out, or whatever you're doing, you're a contractor, you got your building materials all picked and stuff, the first thing you want to identify, and a critical part of any professional project manager, is a risk mitigation plan. You want to identify any potential risks to your project and have a plan in advance for how those risks can be mitigated. if you don't know what those risks are, that's a huge, exponentially more critical risk. My example until we got to 9 o'clock was going to be the non-farm payroll. We all know, I think anybody in the sound of my voice knows how, morning Antonio, how, boy, I tell you, this VPOC migration's working out. You must be rich by now. You ready to retire? That's about as sweet, isn't it? Look at that. 3 beautiful examples, bing, bang, bomb, all working out perfectly. And then there you go. Anyway, if they didn't publish and we didn't know the schedule for the non-farm payroll, and it was a possibility to just be released at any point, imagine that as an unmitigated, there's no way you can control that risk. So that's why this environment we're in now is particularly dangerous, I believe. And again, it's not political at all. It's just a fact. And all you have to do is, look back over here at the full, come on. Look over here at the full, look, the full micro composite chart here. And there's, oh boy, let's have some tariffs, out of no place. Let's go to the Rose Garden and have some tariffs. Kaboom. Boom, 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 boom. Now we've come back, and there you go. But that's an example of what the unrecognized, unrealized risk can be based on where we are. That's why I call them the unrecognized critical risk. And Richard, one of the stream guys, stream members, whatever, participants here, he's hung the nickname of Agent Orange on Trump, and so I refer to it as Agent Orange, and the critical risk band are taking the stage. If you're old enough to know anything about Vietnam or anywhere in Agent Orange, you'll understand the humor involved with that compared to the, based on the makeup choices. Pretty funny. Yeah. Can you believe it, man? This is one of the ones that you screen capture when you're being an internet guru and you tell everybody how fantastically this setup works. And then you don't show the 100 countless ones where it went like this and you got stopped out. But boy, that is about as textbook as you could want to have it be right there. It would be interesting, and I have no clue how, to figure out if some particular context about today's trading day figured into that, Is it in the RTH 1? Is it because it's in the first hour? I don't know. I have no clue. I'm just throwing out ideas. Because, boy, if you could identify days where this was going to happen regularly and be, as we've talked about a lot in here, and Antonio and I have laughed about a lot, how can you possibly miss the yellow brick road? And it is such an obvious setup that most people go to it first when they're trying to vet a setup and a trade. But for me, and I think others, it's one of the most unsuccessful because this is, in my memory and in my data, this is a pretty unnormal situation, non-normal, because most of the time it'll come down here and it'll go up here and take you out or price check at aisle 3 and then it'll go the other way. This is just falling off hard, bing, bang, boom, and pretty much textbook, VPOC migration, test up, don't get into it, down you go. VPOC migration, test up, don't get back into it, down you go. And of course, this is completely rearview mirror trading here. When you're on this, when you're looking at it from right, when you're looking at it from right there, what's going to happen? You don't know. But, that's the point. such a difference in the hard right edge. Where's it going to go now? Write it down on a piece of paper. If you look at the bigger picture and the context, you would imagine that it's going to go lower. But is it? And is it going to go lower? And where would be your trigger? And Dan. Of course, there's no setup down here. This is the setup. This would be the setup that people are looking at. And sweet. 80 to 62. 20 handles, for Christ's sake. Yeah. Oh boy. Oh boy, oh boy. Oh boy, oh boy. Oh, and I'm on the wrong screen. Sorry about that. You can tell I'm a professional influencer. You know what's wrong? I don't have a wrapped Ferrari and a gold Rolex, probably. I bet if I get those, then I'm never on the wrong screen and, you know, all that stuff. I've got a Rolex. I have a Submariner, black face, stainless steel, that cost brand new $750. That'll tell you about how long ago it was I got that. At Little Switzerland in St. Thomas, the U.S. Virgin Islands, late 79, early 80. That's actually a lie. I gave that watch to my son for when he graduated college. And I got another one in Switzerland when I was over there in the mid-90s. Same exact thing, same year and all that. But have full disclosure, that's not the original $750 one. And the one that I have that I bought in Switzerland in that time in the mid-90s, I think I paid in a jewelry store. I think I paid maybe $1,100 or $1,200 for it or less, under $1,000 probably. I don't know what they're worth now, but you know, some stupid figure. I know them. Huh? And the funny part about Rolex is, in case you have one or don't have one, they are a conventional mechanism. You know, a $25 Casio is much more accurate. We used to joke about it, you know, well, it's coordinated universal Rolex time is who the hell knows, because it could be off 3 or 4 minutes or whatever else. It's pretty funny, but it's just, you know, once you get once it's an old watch that I'm, you know, it's part of me now. So certainly isn't my identity, but it is pretty funny when you think back about it. And back in the days when it was a reasonable watch to buy, I think they're somewhere 10 grand or some stupid shit like just, you know, are you kidding me? And they're not expensive, you know. I mean, the Petit Philippe's and all that crazy crap is a lot more than that. So we're going to not talk timepieces here anymore. I certainly don't recommend them as investments. What are we doing? Let's go around the horn. Well, we've got our numbers out of the way. I would be relatively sure there's going to be some sort of random risk today, and I'll tell you why. Right there. There's already been one the court should defer to me on the cause for Fed Cook's firing. Why? You know, but this is not going to be the last statement made, I don't believe, on this hearing today. And that seems to have market moving potential. So I would say limit your involvement. Remember that every time you engage in the market, you're putting your capital, your account at risk. The less time you have your account at risk, the better. And that's the fact. And if there's, you know, a random risk potential, that fact is increased exponentially, I believe. And of course, anybody can get lucky and be on the right side of something like that. And good for you. But that's not trading. That's not trading as a statistical business looking for consistent profitability. That's gambling. And if you enjoy the adrenaline rush of, you know, gambling with trading and hitting, you know, clicking that mouse like you're killing snakes, and it's the same thing as when you go to Vegas, you can't stop throwing the dice or whatever it is you do in Vegas. That's up to you, and that's good. If that's a form of entertainment or release or whatever, super. That's not my goal, and that's not the purpose of the stream here. So that's that's that. And it's important to remember, if you're just cruising through, first of all, hit the thumbs up, subscribe, send money. If you need the session prices, drop something in, and be sure and drop something in the chat. If you'd like the session prices would help, I'll help, you know, put something in the chat. I'll hook you up with how to get them. I push them free, 24/7 from Sunday night at 1700 through 1600 on Friday. But this is my trading journal, and so the purpose here is for me to improve. I was going to say perfect, but I should say improve, or you know, further consistency on my particular trading method, which is based on volume profile, statistics, and probabilities. And at this point, I'm vetting some trades, which are the IB trades. So let's talk about first trading as a business, and what the hell am I talking about? If you're interested in having a statistically significant business, you have to recognize a couple of things. The market is a random environment, and the probability of the next trade is 50-50. It is equal to a coin flip. Remember, something that we hear a lot that nobody probably wants to recognize or pays attention to. Likely they believe that it comes from a lawyer somewhere, but it is a statistical fact. The historical records are not indicative of future response, right? Or a future, yeah. I forgot how you say it now. Anyway, past performance is not indicative of future results. There you go. Boy, that was a brain fart. I am getting old, I guess. What that means is that exactly that. It's a statistical fact that previous results, no matter how far back you look, are not indicative or do not guarantee future results. The outcome of this next trade is 50-50. There's actually a terminology in the casino world, which, in case you haven't figured it out yet, our business model in trading is essentially that of a casino from the point of view of the house. They play no game which they have not pre-identified an expectancy or an edge in specific rules. Then on the casino floor, their only mission in life is to play that game as many times as they can, because they know full well, statistically, the law of large numbers will manifest that edge, percentage of edge, to their bank account, and it will, compound exponentially. They know gamblers will win. Traders have to recognize that the outcome is 50-50. What does that mean? That means you're going to take stops. Anybody that says I'm 100% right or my win rate's 100%, you just, you know, before or after you start laughing, turn around and walk away, or scroll off or click off or whatever it is. And these guys on YouTube that talk about the high win rate, that's an absolutely useless statistic taken out of context. But let's get back to trading now on the casino floor. If some, when a gambler wins, the pit boss doesn't come shoot the dealer or change all the rules. They just take the next trade. Play the next game, and we should take the next trade. The terminology for that disbelief in statistics is called the gambler's fallacy. You can even Google it. And it goes like this. 20, on the roulette rule. Oh my God, the probability of the next spin has got to be red because we've had 7 blacks in a row. Well, guess what? If you've had 7,000 blacks in a row, the probability of the next spin is 50-50. And in actuality, it's not 50-50. They further skewed it to the probability or in favor of the house by adding the green 0. And in America, the green 00. So there's 2 greens, 0 and 00, plus the reds and the blacks. Has no bearing. All of the historical stuff has no bearing on it. Now, if you're vetting a trade, which I am doing, in trading, here's a more typical reaction to the VPOC migration. So we've had 3 winners in a row. Here we go with another one. It tests up, it comes back, gets up here, but it didn't go the other way. Now it's testing back up towards price check at aisle 3 and taking out everybody's stop. This would be what would happen if I took the thing. Anyway, back to the vetting of the trades. I've identified the IB, or the initial balance trades, which there are 2. There's the IB failure, which is essentially mean reversion, outside in, and there's the IB continuation, which is, as the name implies, a continuation after the statistic. The mean reversion trade, or the IB failure, is typically suggested in a balanced market or balanced session, rotational. The IB continuation trade is typically suggested or expected, anticipated in a directional day. What's the context today? Well, let's look for Mr. Blue Guy over here, and it's pretty much directional, isn't it? Boom, 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 boom. VPOC migration south, down we come. We haven't gotten, and this is not within the first hour yet. Remember that the IB statistic is only valid after the first 1 hour of the RTH session, because by definition, the IB high and low and the resulting statistic mark the high and low of the first 1 hour. So the low keeps moving down with price, the high keeps moving up with price until the first hour is complete, at which time they don't move anymore and the statistic becomes active. The statistic says that in all 4 open types, there's greater than 97.7% probability, 97.7% probability in all 4 open types that price will exceed the IB low or the IB high at some point in the balance of the RTH trading session for this day. The same session, in other words. Now, that's a pretty, substantial odds, right? But there's some caveats. First of all, it's one or the other. And second of all, you don't know if it's 1 millisecond after 9:30 or 1 millisecond before 1600. But the statistic holds, and there's a reason why it's 83 or 4% every day. I mean, this one is, because these statistics get hit. There's a reason why the IB statistic is minimum 97% in all 4 open types, because it's hit that frequently. It is achieved that frequently. So my trades now that I'm vetting are the IB, the 2 of them. It will be, obviously, I'll be looking for the IB continuation trade, because what do we have going on now? It's a pretty directional day so far. Can certainly, the tanker can turn and it can start rotating and start doing this kind of thing. And then we have a big B-shaped profile, which is long liquidation, but we'll see. What does it mean that I'm doing this? It means that I am not anticipating a trade at any point until after 9:30. And let me put a caveat here. Do not try to trade to the statistic. What do I mean by that? Well, okay, it's 9:27 or 8:26. We're right here at the POC. The IB low is just below us. We're below the VWAP. We're below the mid. Get short and target it down here. Target the IB, the closest IB. Many, many times this happens. And it'll go completely the other way. I don't know how many times, would be an interesting statistic to know, and take out the other side. So there is no statistic yet until this is taken out at 9:30. And if it's taken out right now, it's not a statistic, because it is not 9:30. Yeah. So I stand here and I am anticipating that. What am I thinking? I'm thinking that it's probably going to be an IB continuation trade short because of context, and I don't want to trade against context or counter trend. We've had a series of VPOC migrations south. The full session VPOC is now migrated south. I'd say the odds are pretty good we're going to take out this IB low, but I can tell you the number of times I tried trading to the statistic in advance and stopped taking a loss is not anything to be proud about. So I learned that lesson. The idea with my keeping Mr. Blue Boy over here and keeping an eye on the context is that now we're approaching 9:30. And I will start anticipating that we're going to take one of the 2 statistics. And, common sense says we're going to take the lower one, right? And then I can zoom in to look for price action and trigger and all those things for the trade. At this point, it's a good thing to confirm you've got the right package queued up and, right trading methodology and all of that stuff. What is our... Oh, the volume's increasing. Look at here. We're up to 119%. Now, 119% of average volume recent is not that great, because the last few days, the last few days, we've been in the 60s, 60% range. So you need to keep your thinking cap on there. Contexts. The IB low continuing to push. The IB high hasn't moved. All those retail rearview mirror guys that knew very definitely we were going to go lower got short right here at the high of the day and have made more money than the Federal Reserve. Here you see yesterday. Here you see today. I think. No. God damn, I got to stop that. Yesterday, today. Oh, yeah, I wanted to look at that too. What's that micro composite? Seems like I've got that off. I thought I had it exactly right, but I want to be real sure I've got that MCVPOC in there correctly. So we got 84 quarter about, or 82.75-ish. I don't know why I keep doing that, but anyway. And you see what happened? If you traded to the statistic, you're stopped out. 82.75-ish, right about here. Well, This is a little bit puzzling now. I think my problem is right here that I did not update my MCVPOC from 2 days ago to where we opened today, and I will do so. Call it about 80. So we got back to here again. Back to that high volume node. What I'm going to do, and this may be a goofy workflow, I'm not sure, but I'm not worrying about it now. I'm going to call that 8. I'm going to reset this to a, I don't know which red I used, to be honest with you. There you go. That looks pretty good, I guess. I'm going to reset this to the VPOC. Now, this is like, no, wait a minute. 64.80. Yeah. Something's off. Something's crazy here. There we go. Jesus Christ. What a moron. Sorry about that. If you were watching, I didn't. With IRT, you got to be careful. You see how the bottom down here changes to gray? And you're not looking at the current, most recent bar. Now it's all white. I was missing this bar and only seeing this one. I was missing today. And the reason I spotted that, albeit I should have known better from the beginning, is when I confirmed the MCVPOC here, and then I look at today's price, I'm going, but wait a minute, we're way below that. Well, yeah, we are. Okay. So now in reality, this has been taken out already and is no longer the active number. So I can do this. My workflow is then to change the text of the revisited level to black. That was painful. And what has happened? Well, we're past 9:30. Right there. Jesus, it's amazing. There is our statistic. There is 9:30. We have not taken this statistic. Trying to trade to the level has disappointed you to the tune of 10 handles here. I mean, depending on where you got short, you know, we're now trading 13 handles above the IB. Trading up towards the VWAP and a bunch of stuff. So I don't have a trade, but I am anticipating what I might do. And I've not ruled out drunk yet, so we'll see. Actually, I quit drinking a while ago. I used to have, not that I drank a lot, but I used to have a glass of wine or two at night. And I got to feeling like, I got to thinking that was probably not that healthy. So I've chopped it off for a while, and I noticed a big difference in my gut. It's funny about the older you get, the faster you put on weight and the faster you get out of shape and the harder it is to get back in. When you're a kid, you can eat and drink anything and, you know, gets in front of your mouth. But, well, I'll tell you, the older you get, it's amazing. So here is our iceberg of 797 contracts Trading through here. Stops of 108. I have nothing to do until one or the other of the statistics are satisfied. I hope you've had a great week. Be great to, great to know, share it. I was I was dealing with a colleague in Static, Garrett, there, and he was pinging me some stuff, whatever they call it, direct messaging, about trading stats and how has it been going in its reaction to how many trades a day or a week did I take, and because he's aware that I'm vetting the IB trades, IBC, and only trading those. So there's the Static app, which has been developed by Rod, is pretty handy, and I need to refer to it more because these statistics are pretty disappointing to me. But so I got on the Static and then made a snap for him, which might be kind of interesting here, I guess. This is the Static account, my Static account for the month of July, trading the once I focus solely on the IBC or whatchamajingus trades. And you notice there's basically one trade a week and not every week. And this one was a premature stop move. That's obviously what happened. If you want to drill into them, you can click on the individual trade logs and see what really happened and all that kind of stuff. I also put a screen snap and upload a screen snap of Bookmap there and all that. So this looks all great. And this is a classic example of what an internet guru and win rate and all that bullshit can do. How you can skew things around to look like you're a real star. 100% win rate. Wow. Average win. Wow. Profit factor infinity. Ooh. That's a lot. Here's year to date. Before I started focusing on the IB trades only, this is zero, I'll point out. Account, balance down to 1,000, which was one stupid day of over trading. And when I went, no, this is not going to work. Unfortunately, or I suppose it's because I don't know how, you only see 1 month of the calendar here. You can change it, but I didn't in this screen snap. Here's that period of time of the July. No trades in August. Some drama with TopStep, whatever, but I'm here every day. Now, Rod has also configured a way that you can enter bona fide missed vetted trades. And I mean, you don't just BS. What I do is I do a replay here. This is an example. I haven't put the title in here yet, but this is a replay of yesterday. This is an IBC trade that I missed yesterday at about 12:35. So what I do is I go back at night. This is a replay. You see the progress bar across the top. You see the data that has been replaying. You see the open data file, complete transparency here, right? No, and when I put the text in here, it'll be, there'll be 3 stars and note that this is a replay capture and all that. But this is how Bookmap marks up your trades. There's the entry, there's break even. Here is where the first profit target is hit. Break even goes down to the stop. Here's the second profit target. No heat, no muss, no fuss. This would have put all 5 of my accounts in the XFA, and was no heat. So that is a vetted trade. And when I'm doing one of these screen captures for a missed vetted trade, I don't touch anything. It's the 2-lot bracket. I put it on, and I trade it like it's the real market. I don't just go back to the time and know when it was. You know, I start, the screen snap captures that, but I actually, where's the trigger? Is the trigger real? Did it make sense to me in the context? And then you can in the trader's log, in the trade log in Static, you can put whatever notes you want in addition to the screen snap. So that's, you can really drill into it for each one of these, or if you want to be realistic, each one of these. But this is what these internet guru guys, and the meaninglessness, if that's even a word, of win rate. There's 100% win rate. Yeah, well, what's real? Looking back year to date, it's 41.67%. Not so great, yeah. So there's some stuff that you can do. That's part and parcel of what I'm working towards here. So as far as vetting a trade. And the statistics, what, kind of something to be extra aware of on these internet people that are talking about my win rate of 90% or 60% or whatever it is. First of all, the number they should be talking about between, if they don't have the Kelly criterion or their Sortino or one of those well understood numbers, what's the expectancy and over how many trades? That's approaching it statistically. You know, you see there that over 5 or 6 trades, I have 100% win rate. Well, that's nothing. That's absolutely within the possibility of a random distribution. So you need to have a sample set of more than 100 at least to be outside of a normal standard, random distribution. By that, I mean, okay, if you flip a coin, it's 50-50. If you flip it 10 times, it's very probable you'll have 8 or 9 heads or tails in the same in a row. That's not surprising to anybody. That is random distribution. That is that's the same as in traders a drawdown or a losing streak or whatever. That's within the scope. It's very, very, very probable, and that's the reason that you need to have your trading set up and your package or your account, your trade bracket, however you want to name it. It has to take into consideration how many stops in a row can you preserve your account and remain to trade another day. That's why you hear a lot of people talk about, never risk more than 1 to 3% on any of your account on any one trade, because you can have a substantial string of losses in a row, and it's completely, your setup is still very valid. It's completely within the parameters, and it's within a random distribution, and nobody will question that. Except your significant other, when you say, honey, I blew up the bank account because I was trading, 50% of our account or something like that, then you're going to have trouble. But those are things you need to think about when you're approaching trading as a real business. Consistently profitable, sustainable business. Now are we going to get our stat? Maybe. remember when I said early on that are we going to now just rotate back and forth and build this out into a B-shaped profile, which would indicate long liquidation? It's starting to happen now, right? They built it up here, and now they can trade it back and forth around here and bring the belly out. We're well into the hearing story, and I think a heightened environment for risk myself. That a couple other things about static while we're waiting for this to happen. Rod has also the reason that you enter valid missed vetted trades is there is a real handy little tick bar button there that you can click, which includes those missed trades into those profit figures and your graph and everything. And it is shocking to see what potential you did have. You followed your plan. Really shocking. I might be able to do that here. I'll check that out in a minute. I want to keep focused on the possibility of trading here today. And as we all know, I don't multitask very well. Oh boy, now we're going to get him, huh? Ooh, a crazy Ivan. I don't know where I don't know why I started doing that, but I like it, and so it makes me smile. That's actually a line out of The Hunt from Red October. Don't ask me why I know that either, by the way. So there you go. Oh, I know what I didn't do yet. We're not rocking and rolling here. That's probably the problem. We're not all dancing. Footloose, right? Footloose. Burp, burp. I'd like to, though. Sweet mama. A good looking gal walking by my office door here. I may have to go chase after her. You never know. It is Friday, after all. Do I imagine that our 97, well, actually in today's open type, it's about 98% of the probability. And no, I'm wrong. It's 98.1% probability that we will do that right there, which we just did. That is take out the IB statistic to the low side. Now, my ears perk up and I decide what I think we might do here. Will we mean revert? Or will we come back in? If you had to look at the context, you would think it was going to be a continuation. What am I doing? We're not making any headway under that IB. Damn it. Missed opportunity, should have taken it. He who hesitates is lost. Now you see, had I clicked the button when I had it ready right here, 60, okay, I would have been scaled. Not profit targets, mind you, but scaled. My range requirement was in line. No obstacles to my scale. And what have we got below us? Unfortunately, now we don't really have any targets down there. It's kind of outer space. So I'm not, overwhelmed with the fact that we're going to make lower ground. But on the other hand, well, we do have this naked volume point control down here from a couple days ago. And I need to be trading, not talking here. Poor performance on my part. I'm not saying that you shouldn't consider the scratch or the risk neutral scale as your target, obviously, the goal of the trade, but it is without a doubt the first real important target. And I blew that right there. There, and then again here. And we got the MVPOC. Damn it. That's really irritating. I was actually ready to click the mouse and fear overtook me. Very plain and simple. That's paralysis by analysis right there. Right there, boys and girls. Something. If nothing else in this stream, fade everything I do. You'll at least learn what not to do, maybe. Doggone, that's really frustrating. There's scale. So once that's on, then it's just, put on your helmet and put your feet up and away you go. And hope for, not hope, you should never be hoping, but you anticipate that it will work out in the direction that you had planned. And clearly a directional move. Late in the game, I believe. Now. My spider senses and my spidey senses are alerting me to FOMO or regret, right? When it comes to taking this long, I think that it's, old saying on the ranch is strike while the iron's hot, and that's pretty important. I really blew it right here with my finger on the mouse, and then second guess here. And only to scale. I mean, we're only at the risk neutral scale. This hasn't gone, 1,000 points in my direction, but all it needs to get is that risk neutral scale off, and then come what may, you're either golden or you're not. As we revisit this level a few times, it starts to become, I start to question, I don't know how to put it exactly. Does the strength of that trigger and that target and that setup, does it start to dilute a bit? You know, we have now you need to remember that we've got the RVPOC just up here above us. I don't know why that's not in the right spot. And there's all these people that are looking for this short have got their stops living right around here somewhere. That's a lot of fuel. Doesn't really indicate it over here, but this is resting liquidity. And if I'm not mistaken, stops are not reflected that way in the book. And so now what's happening, you see? And of course, I have to be really on guard for the human mind has a real, obviously, the reason we've evolved and got this far, anybody that can hear me, is those of our ancestors that didn't have certain skills ended up something's lunch, probably. So I'm not sure where the desire to be right, I guess, bias confirmation, is it, comes into play, and fear and FOMO and confirmation, wanting to be right or confirm that your thinking was right to give you a sense of confidence, and those kind of things are not good. And here we've just touched our RVPOC. Didn't seem like there was a lot of stuff up there they were interested in getting. We did migrate, right? From down here up to there, outside in. So if you're not worried about the mean, the IB trades, and you're working on the mean reversion trades, for example, boom, bitty boom, bitty boom, bitty boom, there you are. There's one. There's a mean reversion trade textbook, actually. And what is it? It's damn near 10 handles. For my 2-lot risk neutral package to work out, I need 12 points to achieve both targets. Right now, I think we're going to bounce off this IB low and rotate up through the VPOC, the MC, or the volume point of control. Why does this keep moving? Am I losing my mind or what? This was up here, so I moved. This was here. The point of control was up here. I moved my flag up, and now it's down here. Now something was happening that actually caused me to see if that continued. If it's what's going on now. Okay, it hasn't come across on Bookmap yet. The IRT, down, up, down. So the flag is accurate, and typically I look to IRT for the source of truth. So I'm going to show them who's boss. I'm going to trick them. I'm going to put a flag at both places. Oh, I can't. Now I'm right, baby. Anyway. I'm trying to figure. Oh well. Anyway, I don't know what I was talking about. I lost track when I got sidewashed with this migrating VPOC. Sorry. I am old. Cut me some slack. I can stand here and stay focused and talk for 7 hours or 8 or 9. Actually, I start about 6, so 8 hours a day. Just like a regular business or a job. And that brings up a real important point. I don't know about you, but I grew up working hard from can to can't. I grew up on a cattle and horse ranch in Montana, and my mom, my dad, and me ran the whole thing. And so that work ethic instills in you a concept, whether it's valid or not, and I think it's probably a bad thing in this day and age, that you expect a reward commensurate with the effort expended. You work 8 hours a day, you get paid for 8 hours a day at the base level. That's absolutely not the right way to approach trading. And in fact, taking your career and your, life to a different level, you need to realize that you make more money with your brain than you do with your back, is a simple way of saying it. And with trading, referred to it as risk exposure here, I talk about it that way sometimes to myself, remember. So I want to take a limited number of exposures to risk for the maximum potential reward, i.e. A+ trades. I'm not interested. Obviously, the risk-neutral scale is really critical. It's a huge psychological relief and benefit to this methodology, but it is damn sure not the goal. I mean, you can take scratch trades from now till the cows come home and you'll go broke because you've just paid commissions. So you want to make sure that there's somewhere to go. There's a path there's an end to your journey. That's what you have that's profitable, not just a scratch. And the least, and it's said 1,000 different ways, right? Let the winners run and cut your losers short, and on and on and on. There's all those different trade-isms that you can quote or think about, but that's what it boils down to. You want to minimize how much time and to what extent you expose your account to risk, and you want the risk to reward, that risk-reward ratio, to be substantial. If you have a 1-to-1 risk-reward ratio, you're going to go broke, pretty sure. Think about it. If you take 2 stops in a row, you've got to get 3 winning trades in a row to get 1 ahead. If your risk-reward ratio is 3-to-1, or risk-reward would be 1-to-3, then you can take 3 stops in a row, or 1 winning trade will compensate for 3 stops in a row. And believe me, you're going to have consecutive winners and losers. That's a function of statistics and just life, or whatever the hell it is. A random environment, which is what we're in. And I'm not saying I'm the perfect example of that, but I have turned the corner mentally that I believe I understand the right way to go. I just need to transfer that to the keyboard. Now, had I taken this wherever the hell it went, this trade right here, when I had my finger on the mouse, what would have happened? I would have been scaled, and I would now be stopped out. Risk neutral scratch. No harm, no foul, but I put my account at risk. Did that make me any money? No. Will you know when it will or will not? Absolutely not. But that's the reason that I am focused on properly vetting the setup, so that when I do put that trade on, I know that everything in the best of my ability given a random environment, an opportunity of X expectancy to get to that target. And I really believe that's the way to go. Yeah. This damn thing doesn't want to work right, does it? Getting kind of fed up here. Can't seem to get these levels to line up. I guess it's because of the way I got it wound in. Anyway, who cares? You get the point. So we have, what do we have going on here? No random risk occurring lately or yet, and I'm sure there's going to be. I'm sure that this Fed Governor Cook's hearing is not going to go without further commentary. Well, pick your favorite expletive. I tell you, I'm getting way too good at not standing here and being patient, following my recommendation that there are 3 trade types. There are positions, there's long, short, and flat, and that the majority of the time, flat is the way to be and the way you are. I'm not sure that I'm, not just rationalizing. And one of the things I was getting ready to say a minute ago there that I think I got distracted, which is pretty normal. The human mind is super good at rationalization, seeing patterns. This is where I was with, your ancestors that weren't good at that ended up something's lunch. And probably most insidious for traders is remembering only the positive stuff. If you, let's say you enter a trade and it comes back towards your stop and you move your stop away from entry. And it goes up and doesn't take out the new stop location and then goes on in your favor back towards your targets. That's probably the worst thing that can happen to you, because your mind immediately only remembers, well, moving my stop worked out great. I'm going to do that every time. And that's where you have to really, where I believe I have to really put statistics in place and stick to them. I actually really admire and envy good quant traders. And I'm trying to figure out how I can learn more about that. But here's a fun exercise. Take a blank piece of paper and a pen and just write down rule 1, 2, 3, 4, starting from the higher time frame or however you approach it, and write down specifically each rule that you use to validate, confirm, and enter a trade. I can't do that. And it should be so, those rules should be so specific and concise and clear that you could give them to your kid or your wife, or I could give them to you, or you could give them to me, and you could, it would need to be somebody that knew how to trade, right? You know how to set up the trade, you know how to put on how to enter along or whatever else, not your kid or whatever. And follow that list and trade. I can't do that because I've recognized over this vetting of the IB stuff, which has been very successful, that the last little bit, the final decision for me in execution, in actually executing the trade, boils down to my discretion. And that's obviously impossible with the quant environment, and I don't think it's a good thing for us as, you know, as discretionary traders, but I don't think it's a good thing. I think my rules should be better defined. Right here, came up, tested as an example. I should have gone long. Should have been an IB continuation trade. If I was eating my own dog food, now I would have scaled and I wouldn't be to my targets yet, and I would have been stopped out. So that's the fact. That's one more trade in that big bag of trades, and you should never hang your career or your hopes or your profession or whatever you want to call it, or most importantly your account, on the next trade or the next 5 trades. It's got to be, let's see, over the last 100 trades when I did this valuation, I was 47% positive. You know, I had an expectancy of XXX, and you look at your stats over an extended period of time and you go, okay, it's still within my parameters, or okay, it's not within my parameters, I need to change something. But if it's still within your parameters, you just recognize that you're probably in a random distribution of losing trades for whatever reason, and your premise is still accurate. Doing it this way, discretionary, like I just did, that's, you know, I'm telling myself, oh boy, that was a good move, and that's bullshit. Yeah, turns out it was a good move. Turns out I guess I could have flipped that script to here and gone IB continue wherever the IB went. Yeah, here you go. And gone an IB failure. Now, I couldn't do that in my trade plan because here's the mean. That's not, you know, that's just 4 points to the mean. Well, where's your target? In theory. So, things to think about on a slow, is it slow, or am I full of crap once again? No, we're still at 118% volume. And and look at how our rotations have changed. We got up as high as an 8.2 ATR. Now we're down around 675s. This is important to notice, and it's important to preface this on a bigger scale. This average volume, the last 3 or 4 days have been super light. 60s, in the 60s%. So doesn't, you know, maybe we're approaching it's just like taking statistics in your trades. How far back you look at the sample size to determine average and above or below. That's what I need to look at here when I'm doing my homework, not during the live trading session. And now I've got to go, being summoned to the opposite end of the house. I'm going to go see what the boss is up to. The music's on. Drop something in the chat, or thumbs up, or hello, or whatever the hell it is. And I'll be right back. I hope.
friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto.
Little sell iceberg up here and liquidity at 72. Whatever that means. Liquidity is, I should say, context is still down, but we are starting to build out that V that I was talking about some time ago here. And the V-shaped profile is indicative of long liquidation or selling, basically. There's that V-shaped profile I'm talking about, as opposed to a P-shaped profile. These are all old market profileisms. Who the hell knows, you know, really.
eso en qué pasó y cómo me afectó las horas que pasé en aquel bus. No entiendo
Okay.
por qué mi
And we got another one.
abuelo
What are these guys doing over here?
distraído
Look at this foolishness here.
se
Remember, this is just because they're bobbing back and forth between these price levels, and it only takes one contract.
Acapulco no era un
Just
lugar
math, data,
para una niña
etc.
querida.
I'm not going to bother putting these three in here. This is stupid.
Enfrenté la soledad.
We're swooping down here. We got a whole bunch of got liquidity living up here, and every level you can imagine coming down here together.
Y a pesar del miedo
The first of the day was just about
y llorar, llorar, llorar.
a rear view mirror trader's paradise for this IB migrating VPOC clear down to here. So, you know, if you, depending on how good of a BSer you are, you got short around 93 and all the way down to the 60s, 20 handles. Cool. Wouldn't that be nice? Now, something that's important here with what I'm doing is I cannot take, I will take one more trade of these 2-lot risk neutral trades, and then those 5 accounts are out onto the next phase, which is the XFA. At that point, then there's no consistency rule or any of that stuff, so you can, I can trade more normally, which is to say, always use the risk neutral scale, but then instead of just the fixed 48 tick target or T2, I can align it more with normal like targets and levels and things like that.
Estava a viver, caminhando na vida, sempre chorando por uma nova ferida. Mas como até que de um mato nasce uma flor, muitas vezes é da dor que vem o amor. Eu que pensava que era um engano, olho seus olhos de luz e vejo um anjo. Esqueci dos tropeços, esqueci das caídas, em noites perdidas vou encontrar o meu lar. Foi do seu
Well, now, boom, 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 boom. Yeah, I didn't take my setup. I've already talked about this a bunch. My IB continuation trade right here. Nor did I flip to the IB failure, because this is only viable in rearview mirror trading. Here's the RVPOC at that time. That's only 4 handles. That isn't any range. That isn't enough meat on the bone, shall we say. Of course, it goes on to be much more attractive. Not to the second scale, however, but you know, there's that. What's the first article of Polarized? Well, boo hiss boo. Boo hiss boo. They're certainly building out that B though, aren't they? Got a couple icebergs here that keep jumping along. Cell icebergs, seeming to keep a lid on it and making the B-shaped profile work. A good opportunity to recite the 11th commandment all together now. Thou shalt not diddle in the middle. That's a real important thing to get your head around. And it's only common sense. What is the definition of the POC? It is the price at which the most contracts have traded so far in the session. What does that mean? Just look at this distribution here. Rotation, 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 rotation. What does that mean? That means they're trading all over this damn thing, and depending on where you get your probability of being stopped out or having it go that 50 direction that you don't want it to go is super heightened. So there you are. That's the reason. And I realize that I am way under trading or paralysis by analysis, whatever, but I'm working on that. But I'm real conscious, or I try to be real conscious of what's going on in my, stimulus in my brain, FOMO or hide or monkey mind or whatever euphemism you want to attribute to it to, so that I don't, okay, I know I'm under trading and I know I need to get more trades. I would like to get to about one trade a day, but I don't want to force trades. I want to take a setup, one of my vetted setup. And so if that doesn't happen in a day, well, so be it. But to not trade for, 3 or 4 weeks, that can't be good, even though there are extenuating circumstances around issues with the account, etc. But that ain't good. Considering especially that there have been vetted setups within that time that I've recognized, missed, or whatever. So that's the part I have to work on. Not approach it from I got to make a trade a day. That's not it. It's I need to put on a trade when I have a vetted setup present itself. That's the important way to look at it, I believe. And it's, don't forget, Friday going into a long weekend. I'm sure there's a string of traders heading for the door the closer we get to noon, That's pretty well understood fact, I believe. Today, what we offer, naked volume points of control there. Just tagged it out, that's correct. B shape forming up perfectly with the micro volume profile, the market profile. These colored blocks are the TPOs. They are actually the market profile. This over here is the volume profile. So you're getting both, the best of both worlds. The wrinkle, the ES, 12 tick, 20, 48 tick. That's the difference in volatility. Just there's an interesting observation. In order to get this same kind of relative price action and scope within the view, in the NASDAQ takes 48 ticks per box. 48. That's 12 points. As opposed to 12 ticks up here, which is in the ES, which is 3 points. Got no idea what's going on. We've spent all of our I'm seeing any random risk, but I'm sure there'll be some comments at some point today out of this hearing with Cook and whatever else. So there's that to think about. Nothing we can do about it, just something to think about. And maybe not, maybe it's the beginning of a holiday weekend. I have no idea what those people are up to back there. Maybe they're all in Mar-a-Lago golfing. I have no clue. Or care, actually, as long as I guess I do care if I knew they were somewhere over China and not, so there was no possibility of risk, then that would, additional unrecognized risk, that would be a good idea. That would be a good thing. So here we are. Boom, boom, boom. 45, 59, 45, or 65, I'm sorry. 65, 61. Yeah, if you're, consider yourself a scalper and you believe that being continually at risk in the market is a good idea and it works for you, go get them. Good for you. Good for you. Not for me. And certainly I've been down all those roads before. But I have realized and come to learn that minimizing your exposure to risk and to the market and taking maximum opportunity for a positive outcome or P&L or whatever you want to say. When you do put on risk, seems to definitely be the way to go. The winning solution to me.
salga el sol, besar todas tus lágrimas y darte todo mi amor.
Yep. So it's entirely in the possibility in the realm of reality for me that we just trade out right here around the POC. Continue to build out this B. We had a pretty euphoric couple of days, including yesterday, all-time high, and now they're coming back to reality a little bit more, and with long liquidation, selling. The probability, or the volume percent of average, and more importantly, I think of great interest is the ATR, which now is was up around 8.5, now back to 4 points. Average rotation, average true range. I don't know why my voice is cracking, but anyway, it is. I don't want to do that. Wrong little button. There we go. Yeah. I got nothing to say here because there's nothing going on that's of any interest to me from my trading point of view.
Llegó para ayudarte a dormir y sabes que con ella nunca tiene que sufrir y con amor puedes vivir. Si duérmete, mi angelito, sueña con tranquilidad. Llegará contigo, ella siempre está contigo,
Well, what happened? I hear the vacuum cleaner going, so I'm going to keep the mute here on the mic. I gotta say that I really don't understand exactly how to trade Rinkos. I've used them for years because I like the way they display. It seems to take out a lot of noise for me. But assuming that I didn't have any other, platform, book map, whatever, how would you trade this? Notice this Renko right here and see the price. 61.70 75. The high here so far is 64.68. So there's we're trading 3 points above the high of this Renko. I'm assuming that once it gets to 12 points, which would be, 3 points, which would be 12 ticks, this wick is going to switch to the high? I don't know. Or, because the box size is 12 ticks. So I'm going to watch this carefully, and so I always forget to do it during the day because I'm busy thinking of something else. As I am, like right here, look at these icebergs trailing off here. Still holding the liquidity at 72.5. 72, I guess you could say. Now we're up here at 64.70, and the high of this Renko so far, if you look on the over here on the info box, is 64.68 right there. So how does that work? Let's watch. In hindsight, it sounds reasonable to think, for example here, we opened here, right at the close of this one. That's the nature of Rinkos. And then we traded all the way up here. But before we got our 12 ticks in, we brought it down here, where it closed. Not sure if that's right. And that's something that doesn't seem to come out well in replay. IRT doesn't really have a good replay. It just kind of goes bar by bar. You can't really, the only way you can see what's going on at a more granular level is to use a time-based chart, I think, that's, ticks or whatever. So let's see something here. The open is 65. That makes no sense. If it's a 12 tick Renko and each box size is 12 ticks or 3 points, then we're already there on this one. Open is at 65 and the high is 68. That's 3 points. Low is 61, which makes no sense. That's 4 points. I can see this is going to require a thorough Google investigation of the Renko chart. Funny how you just use stuff over and over and year after year and then don't really pay that. Works fine for what I'm thinking, what I use it for, but if I were to trade off of it, what would I do? It's real easy to look back in hindsight and say, well, you know, we took the IB statistic here, we traded right, you know, we came right up to it. Here's open, we traded right up to the IB, and then we went down here, and then this happened. But is that how it works? I don't know. And not that that's a trade to take or anything else, but basically nothing to do but watch this stuff, so there you go. In this environment, in my opinion. What's happening in the random risk world? Here we go. So, you can bet your boots that this is going to have some reaction. I'm thinking. Hasn't yet, but not sure what I think about Powell's reaction here. I heard some people that were very knowledgeable about the world and all things finance talking about it. It seems like a pretty limp response on his part, if I'm not mistaken. Now, he is the Fed chairman, meaning he's the boss. And he should have stepped right up and said, no, you're not firing anybody here. I want to know the complete, you know, what is the criteria? What are the rules? What is the infraction? Whatever you want to call it, specifically. And I don't guess that happened. And somehow or another it ends up in front of a judge, which is pretty phenomenally fast to get a hearing in front of a judge in a day or two, I would think. What a world. What a world we live in. I'm getting to the point where this day is going to fast approach write-off city. It's now We're now very definitely, we're nearly an hour into RTH2. Depending on how you calculate it, or we're just reaching RTH2. If I'm not wrong, there's 270 minutes in a full trading session. RTH session, 8:30 to 1600. What Rod has done is he cut it off at about 15:15, I think, for the cash market, and then divided by 3. So he's got a little shorter. His is about 2 hours and 15 minutes, where in reality it's 90 minutes. If you take the full session timing, it's 90 minutes per RTH period. So RTH1, RTH2, and RTH3. I think I've done that right. Nothing important, or just more or less a way to group, or to subgroup the day for statistical analysis. And of the trades that I got, my winning trades, what percentage of them were in the RTH 1, 2, or 3? Which of the losing trades? Is there any significance? In my older journal, it breaks it down to days of the week and hours of the day, to try to give a more granular, more specific kind of analysis and refine the edge, or the expectancy. The edge more than the expectancy is a math function based on win rate times average winners minus loss rate times average losers, and then over what subset. That's the expectancy formula, if I'm not mistaken. And so it needs to be that needs to be thought about. Quite frustrating. I would have loved to have tapped this month off with one more trade, putting all of these 5 accounts in the next level. Today's the last trading day of the month, unfortunately. Sucks. But all of those things, if you let them, if I let them, they could add to FOMO, poor decision making. They could feed into those monkey mind attributes that aren't conducive to a successful, profitable trading business. Might be good at, something that requires that kind of aggressive action, but not trading. Oh, damn, it flipped and I wasn't watching. What a bitch. No, okay, I got myself switched off there. Sorry, no problem, never mind. And now we've come back down to 64.66 here. I'm trying to watch the two of these together, right? I'm trying to watch price and the Renko here and see if I see a way to trade that. And I'll definitely Google it over this weekend. I got a lot of stuff to do. I'm working on the refining my backtesting for the IB failures to line up basically the proven statistics from the Static group, Rod in particular. and code those into IRT, which is what I use for backtesting. And up we go. Let me get back over to the Renko here. I wonder what happens if you set your Renko box size to the ATR, for example. No idea. Just even thinking about it, I don't know. Oh, wrong one. Sorry about that. That's the back test. So the ATR here is something, isn't it? What is this all big about? Why did that not go away? That's the wrong. This is the wrong tab. So 4.5 points. That's 16, 17, 18 ticks. Well, that's pretty dumb. Why is it doing that? I don't know why it's doing that, boys and girls. $18 ticks. So this is 12 ticks. Oh, here we did. Now we have crossed over to this one. And why did we do that? You see what I'm seeing here? We got a little new wrinkle starting here. And that happened right here. So 65 to 71 is a hell of a lot more than 12 ticks. Well, I gotta figure this out. That's pretty funny after, almost embarrassing after all these years. I don't really know how that's forming and why in comparison to price action in ticks. I mean, it's the box size is ticks. That's pretty obvious. 12 tick wrinkle. thing about Rankos are they have nothing to do with time. So obviously there's nothing to do with it. I will have to get over to the first place to go is to IRT, Renko charts, and then read through the information there, especially from Chad, which is really good. Really good. He was a developer, the head developer, if not the only one. I think Bill Lind is a coder too, a developer also, but for the longest time it was Chad and Bill, I think. Now Eddie is, Chad has left after years. Probably made him enough money, I guess. So here we go. We're trading up to, through those two icebergs, and up to our VWAP, maybe. And of course there's VWAP, and there we are. So that part all lines up. What I'm still trying to figure out though is why this? Why is a new Renko bar, box, whatever, kicked off over here? 68 to 71 is 3. Yep. Okay, that's 12 ticks. 71 to 65 to the low is 6. It seems to me, if I remember right, it's got to move the box size in ticks in one go, I think. I mean, without back and forth. I don't know. I better stop talking before I sound dumber than I am. And that's probably a stretch. I see another thing here that doesn't make any sense to me now that I'm thinking about it. This is a down wrinkle or down bar, meaning this is the open and this is the close. Why would the open of the next bar be aligned with the open of the previous bar? It should be aligned with the close of the previous bar. Open. So here's open, close, open, close. Oh, again. Did it here too. Oh, now I'm getting more confused. After all these years, I thought I knew. I thought I had this stuff understood. And oops. So here you see close, open, close, open, close, open, close, open, close. Oops. Open. Clearly, I don't know what I'm doing. Clearly. That's pretty amazing. I could Google it, but I'm fighting sleep. I'm fighting off a nap. It's nap 30 here in my house. This kind of trading day is important to stay with the market and stay narrating it, but I do succumb to a break. Usually some wonderful delicacies prepared by my sweet partner, and followed in hot pursuit by all the blood draining out of my brain for a nap. But the last few days, like yesterday in particular, I missed a very, very clean. I'll show you. I'll even show you. There you go. 12:35-ish. 12:35-ish. Absolutely great in context. In the new changed context of the day, IB continuation trade. Right to targets without any kind of heat or anything else. I'm kind of tired of missing. And there seems like, I think in the lighter environments, they take a bit of pride in catching people on the back foot or sleeping, or, you know. That was a similar case. Yesterday was a very similar case to what we have today. But what happened was, now it couldn't, well, it could actually happen. I was going to say it can't happen because that low is down below us, but the IB high is up above us. Now it's a hell of a long way above us, so IB high is clear up here at the top of the day, at the high print. Just a tick below the overnight mid. Isn't that funny? So, you know, the parameters are totally different than was the case yesterday. So I don't know. I'm just thinking out loud. Or rambling. Another word for it could be rambling.
Eu já sei remar contra a maré.
Okay, here you go. AI to the rescue. I knew all of this part. I thought I knew this part, and now let's check the formation. Here's the part I didn't know. I didn't realize it had to do with the previous brick. You see this? So if my 12 tick bar is in our uptrend over here a minute ago, in my 12 tick Renko box, it had to move 12 ticks above the high of the previous brick. Let us immediately adjourn to the Renko chart. So that makes no sense. That makes exactly no sense, because right here, in order to draw a new brick, it has to be 12 ticks above the high of the previous bar. Previous bar high is 71. That'd be up here. Nah, that makes no sense. I hate it when that happens. Back to the drawing board. Let's keep reading. We have to shoot this AI guy here, maybe. If the price rises by the specific block size from the previous brick's high, a new brick is upwards. If the price falls by the brick size from the previous brick's low, a new brick is drawn. Well, first of all, I guess typical Renkos look like this. Typical Renko charts do not have a wick. And I suspect that's where the problem is rising. So you see, this is if there were no wicks here, this would be the high, right? The open, the close. This is the high of the Renko, because there's no wick here. So if this bar, so once price gets 12 ticks above here, it starts a new brick, which should be up here. That's got to be it. Let's look into it. Focus on the info box. What is the high? What is the open? Because the high of this Renko box, that's the open. And here's the close, would be the low, never mind the wick. So the open of this Renko box is 64.68. And 3 more points is 71. Let's see what happens. Let's see if the open here. Oh, looky there, 64.71. There, that's it. Okay. So I guess I need to ask myself the question: what are these freaking wicks about? Because technically, we just discovered that if the price moves the box size, which is 12 ticks or 3 points, above the high of the brick, it starts a new brick. But the high of this Renko is really 71.75 up here because of the wick. While this brick was plotting, it opened here, at some point it went up here, and at some point it went down here, and it quit. Now that's even more confusing to me because if we opened here, and let's say we trade down here, and then we trade up here, price doesn't go any lower, so we do trade up here. Once we get to 12 ticks above this high area here, which is the open, it starts the new bar, which is 71. But what about the top? What about the additional 3 ticks? And the same would be the case here. Well, or let's look at, where was I just spotting one that looked wrong? I guess it's only these. Again, same story. Here we have 65 and 4. 3 is 68. The open here is going to be 68. Yep. But how do you account for the fact that the high is really 64.69? That's another 4 handles up here above this. And now I understand why we didn't open another down candle or down Renko, because price did not get below 12 ticks or 3 points below the low. But I don't get why did not this brick open up here at the high, equal to the high? Or actually, if you want to be technical about it, according to what we just read, it should be, we should need to travel 12 ticks above. That doesn't make any sense. Yeah. This is maybe time well wasted. Maybe I should be counting sheep, putting some medicine in my eyes, and let's try Renko charts. There we go. Let's see what happens about that now. Oh, this is, now we got trading views wading into it. Oh, look at that. Trading view, you can set your box size up to the ATR. That's pretty tricky. Sometimes price moves more than one box size, but less than 2 in the direction opposite of the direction of the last brick. This indicates the price swing wasn't enough to turn the Renko chart, but came close to it. These movements are highlighted with Renko with wicks. Well, here's the bar. Here's the brick. We traded down, but not more than, not double the brick. So there's a wick. Is that what that said? Ooh. I think that's a job for early in the morning coffee boomer, not That's not homemade sourdough bread taro curry boomer. Maybe. And here we are at the 12 o'clock hour. Similar to yesterday. Let's look at that snap from yesterday so I don't go scrolling all over the place. I do that terribly. Well, if you look at it, I suppose you can see it. There you go. Obviously, it was a similar day, multiple, rotations with a B-shaped profile going on until about 12:30 when price finally pulled this maneuver and then traded up to the top. I have no idea what that means, but let's keep looking. Not exactly the right analysis here, because here's what we were doing yesterday until about 12:30. And then we took off for the top. Not anything remotely like the big B-shaped selling boy that we're getting here now. Let's do this. Oh, here we go. Let's go like this. So, remember that these are all RTH sessions. So this is yesterday, and here's today. You see that yesterday we did not have this B-shaped profile even forming. We had down below here was pretty symmetrical and directional. Starting out directionally down. Then the tanker sort of turned and we started moving up. The VPOC did not confirm that by any stretch until the very last moments of the day. This is where we had that B continuation. Which would have been a great trade. This was not an IB failure trade because there was no IB yet. How does that match today? It doesn't. And also, where's the IB? The IB is the high of the day. And as it was here, because there's the IB high until we got here. Then we take the IB out, trade back down, come back up, test, boom. Now, another thing to store in your memory bank is the fact that this was the initial statistic. And I'm thinking that's the better one to trade. I'm trying to specifically identify this configuration in my backtesting, and that's the part where I really struggle. So, in a sense, you see, today doesn't matter because we've already taken the IB stat. We are, in a way, an IB failure here. Trading around the B and up a bit, but okay. That's a really hard part about this. You see, it's so easy for humans, and we are so good at spotting patterns, real or not, whether we, our mind makes them up or whether that's a real pattern. That's one of the, I think, known shortcomings of trading. That's why my goal is to be able to identify this stuff programmatically. And I'm attempting to do that. This is the way you backtest with IRT, by the way. This is an example of the risk neutral trading IB failure configuration or setup. You can send it to the chart, which is what I've done here. This is how it works. So here's the IB low. The IB low is taken out. It's, you know, past 9 o'clock, past 9:30, I'm sorry. Just past right there. What is that time? 9:33. Ooh. And then it fulfills the criteria that has been built into the rules. And you see, you know, positive side is this purpley looking thing and red is negative looking thing. And these dots are where we entered long. And here's where we took a first scale. Here's where we took a second scale, or in this case, the stop. And it's red when it goes negative. Here again, IB failure, entry. This bar took the first target, T1, and here we go to T2. Well, one caveat with this that it isn't a big enough deal to worry about. I mean, there's a lot of other fish to fry that I'm more interested in getting coded properly, but it doesn't, in this case right here, this trade, there you go. Maybe that's easier to see. I don't know. In this case, it marks the bar, not the price, where the scale was taken. You can see where the entry was by the level of this targety thing here, this blue thing. And by knowing the way that the thing is coded, it's 3 points. That's the risk neutral scale. And then this is 12 points or 48 ticks. But it doesn't sum them up down here. It doesn't add the 12 ticks into the 40, or into the 48. This should be 60 ticks and not 48. It doesn't register this first target anywhere, just because of the way it's built. And I don't know how to get into the back end in the C++ or whatever to monkey with it. So I just know that, and I don't worry. This is a visual representation for me to see, so this, you see what's happening here is this took the trade at the low, this far above the IB low, or the IB, by the session statistics. This low happened coincidentally was right at the IB. That's why there's a difference here. And how you would look at that is the IB long. This is the trade rule. The low is equal to or greater than the session statistics IB low, and the low minus 1 bar is greater than the session statistics IB low. So I'm sorry, is less than. So here we go. Here's the entry bar, and the low is higher than the IB low. The bar before it, with the +1 over there, the low of that bar is below the session statistic, and that's correct. Per the way the rule, I'm not saying it's the right way to trade, I'm saying it's the way the rule's written. And then we have the fact that it's 60 minutes or, from the session start. Yeah, it's at 9:30, and it's 130 minutes before the close. And then it sets the various prices for the entry, take profit target, take profit here, and take profit 2, and the stop. And then it sets a couple of flags to, how many contracts are left and just housekeeping stuff. But that's how it works. Now what I'm trying to do is properly code. I thought I was on the right track too. I'm trying to code the thinking in static. Oh, here we go. We're under the VPOC now. We're going to come down here and hit this, and then hell knows what. I don't know. And basically what that says is, well, I can show you exactly what that says. No, wrong. That's the wrong what it says. There you go. hope I haven't been on mute for all this time. I've been doing all this explaining about the backtesting and everything else. If I have been, well, that's just a perfect example that I'm firing on about 4 cylinders, and I better push the mouse aside. Well, that's disappointing. If I had didn't have my volume on or my mic on for that entire dissertation about Rinkos and backtesting, and I have no idea. There's no way to tell, I guess, other than review the stream. That's pretty pathetic. I don't know. I'll put in a chapter marker and see what I see, or hear what I hear, or whatever it is. I guess I can remove them at some point. I've never really, I'll be honest about this. I am really fringe YouTube presenter, influencer person here. I don't know if I can re-edit the timeline chapters in a published live stream or not, to be honest with you. I guess I can. We'll sure as hell find out. That's not the purpose of it. The purpose of what I do here and the equipment that I bought for this live stream is to have it be as pleasant an experience for anybody listening, especially me, as it can be. And I'm not, a radio professional and all that stuff. So pretty obvious that I had the thing on mute, and I don't know for how long. I know I'm going to put it on mute now, and then I'm going to go shower and stuff for 30 minutes. Okay. And definitely not an IB failure that I would be finding appealing. Not with the POC down here. It might break off and run down. I don't know. I would not be at all surprised if we didn't just trade it out. It's last trade day of the month, going into a 3-day big national holiday. I suppose every major high time frame trader who could move the market is golfing or in the Hamptons or whatever it is they do. Well, I guess nobody missed me very bad. Look at there. That's going to be my worst. My worst. Yeah, hope. Joke this day. It's pretty understandable. It's a Friday going into a long weekend, end of the month. Yeah. Great time to do something else. It is definitely an iconic long liquidation. Wow, look at this. Amazing. Oh yeah, it's here we go around the mulberry bush here, I guess. Flat. Long liquidation across the board. Where are we over here? This volume is still pretty normal, but remember that, why is this here? What is wrong with this thing? That's not supposed to be there. I remember that we've been really light volume for the last most of this week, so average of what, that's the point. I don't know why this is here. So here we are, light volume basically. We're still under 1 million contracts up here. And down 45 and a half, 45.75%. 45.75 points for a 0.71% decline in value. So what am I going to do now? Who's on third? What's going on out here? Okay, so Monday is Labor Day. And I will not be pushing my my levels and out and stuff. I'm not going to have my machines up Sunday night or Monday. As half days drive me crazy. And it's a short trip, so there you go. Very hot now. 34. Wow, it is hot now. It doesn't look like it outside, but the joys of air conditioning, I guess. So we're going to have another. Don't feel bad about missing anything today. I feel bad about the fact that these doldrum days continue, but I didn't overtrade. I didn't force anything. I didn't trade something with a marginal. I didn't take a C or B setup, so I'm okay. There's some inspiration for you, I guess you could say. This is a monthly outlook of this fellow's at Statistics. Now, he's not having very good luck with the IBC, but 1,000 ticks on mean reversion, IBF 540 ticks. Pretty impressive stuff. So boy, oh boy, is this ever a dud, huh? not, you know, to be unexpected at all, as I warned of this, or shall I say, I said was my suspicion in the pre-market this morning. Not that that makes this stream any more enjoyable for me, but you know, we turn in the final corner here in another 2.5 minutes or 2 minutes, so that's good. I will run through the daily wrap up. It's pretty obvious, but I will, as I always do, and then I'll be back. My machines will be back up with levels pushing on Monday night. That's the RTH Open for Tuesday trade. So there we go. I'm still back on the thinking about these. Now this is pretty interesting. We're going to get we had a swap here from this bar was trading down here a minute ago. Now it's closed, and they have said that it's positive bar, and we're having this story here. So let's watch and see. I want to watch and see what's happening there with how this bar forms. It formed already. We got to 12 points below, or we got to this was more than 12 points, but not completely. And so that bar locked in, and this one has started at the low, or the close, I should say. And I guess the way that you actually quickly look at it without doing the math is that this bar, as we just witnessed, was trading clear down here, but it finished above for a long bar. Now we're going to see what happened over here. Pretty funny. I never really thought about it, paid much attention to them. But we'll see. We will see. Now, my prediction is that if this candle continues to climb to a box size above this high, or this close, this candle body right here, this will form like that with a big wick down and a body on the top. Let's see. And we've turned the final corner here, so I'm going to keep my eye on this Renko chart, but we'll get the daily wrap up in, and goodbye and good riddance to this thing. So we have a really classic B-shaped long liquidation or selling candle or profile. Same over here. I'm watching my Rankos up here. Flat, tight. There's no news on the horizon. Monday's a big holiday, Labor Day, so markets will be closed. And so will mine. And what to say about this one here? No problem keeping the whole day. It's moving so slowly that this is not scrolling the blue boy off the side over here. Remember that this is my version, or just a visual reference. If I glance out of my peripheral vision or the corner of my eye and see that blue line, I know that I have the entire range or session in range. And that's what I want. So we had none of the trades that I'm betting didn't pan out, but we had some pretty snazzy looking VPOC migration trades early on. If anybody was trading those. Not me. I'm betting the IB trades, and I got one or two left. We did take out this MCVPOC right here. The 26th, that's correct. And yeah, we've got the market on close orders coming up at the 50, and then the cash close at the top of the hour. I'll close the stream down then, and I'll be back with bells on Tuesday morning at 0800 for the introduction and a look at the reports and earnings, potential issues coming up for the day, news that's happened over the holiday or the weekend, and pre-market, what has transpired in the overnight session, and what we can expect for the opening. What I expect for the opening, let's put it that way, not what we expect, what I expect. And we've got this 1450 coming up here pretty soon. Do we have any random risk going on? Just a quick word here, my investing.com is my oldest news source. This is all next week. Reports and numbers. This is free. Typically, I just use the day. It also has a great earnings facility, and you can filter it however you want, time zone, etc. So we've got the PMIs and the jolts. And next week, Friday, will be non-farm. Right there, the biggie. Oh, I'm so excited to see what this new devotee of Mr. Trump's is going to have to say about whether he's putting out these numbers or not. That'll be a really big, that'll be really interesting. That would be quite a watershed. I think we've put out the non-farm payroll and those payroll numbers that's like from 1905, and then the Bureau of Labor Statistics was formed and officially in the early 80s maybe, and it's been the first Friday of every month ever since, until numbers came out that POTUS didn't like and fired the guy, and his new guy said he thinks he'll not push those out anymore. You don't like the numbers? Fire the guy and change the numbers, I guess. Looking disgusting. This is the Financial Juice, which is a more modern news feed of mine, also free. This is pretty much like the scheduled docket over here, and then this is more of a squawk box type of thing. And let's get back to dying to see what's going on with my, there we go, oops. All right, so what's gonna happen? Are they gonna, is this gonna now set down here? Once it gets long enough below here, it should form a new short with a high wick, in my opinion. Or a negative box with a high wick. Brick, I think they call them. That's pretty funny. Non-farm payroll next week. Well, there's some big numbers. Let's see how how they do. Not much of a recap today. Not much of a recap needed, I guess. I can't imagine the market on close orders will amount to a hill of beans. Either. Kind of like today. This is kind of a telling indication about the day if you just stop and think about it. Look at the movement in the Rinkos against the timeline. 12 o'clock right there. From 12 till now. Here. I think that's And the reason for that is, as I believe, that the slow volume in trade might just be my perception of it, but I mean, we had an overnight the other day where we had like 5 or 6 wrinkle bars in the whole session. So that's because they are driven by volume and not time. It'll give you some sense of the trade, the pace of trade and the volume of it. I have no hopes or any reason that I'm interested in the market on close orders, frankly. If it were not for my commitment about the stream, that it will be up every day from 8 o'clock until 1500, this is a waste of time. It's never a waste of time to watch the market and to continually narrate it. But from a trading point of view, it's certainly not, it doesn't get your adrenaline up. That's for damn sure. Mine, anyway. And if somebody's trading mean reversion trades and is happy with a small, very thin meat on the bone, boom, boom, here. Boom, 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 essentially just wrapping yourself back and forth around this distribution. Outside in, outside in, outside in, do side do your own, it's just like a square dance. This bar is yet to complete. Ooh, thank you, Mama. This bar is yet to complete. We've been down here and we've been up here. Five minutes or 4.5 minutes for the market on close. Anybody want to make a bet that nothing happens? My bet is that we can sit here and focus on our trade here on the book map and not notice the market on close. That's my prediction. That happened a couple of times during this past week. I was talking and had the market on close, was waiting for the market on close orders and was looking at bookmap talking and didn't even notice it happen. Didn't notice. I'm really curious to watch and see if when and if we set this bar. They got to get some more upside to it before we get that green bar up there, which will have a wick to the downside. better chance earlier of having another red continuation bar, I believe. There we go. Oh, there they did it. They set the green bar, and here's our wick to the downside. And so what? Now we're getting a zipper. Or a barcode. The kids are calling it the barcode now. Okay, so that was fun. I guess that could be some sort of a variation on the old saying, as boring as watching grass grow. It's as boring as watching raincoats form. Or raincoats set, maybe. Yes. Yes. Jeez. A lot of liquidity stacking in here. You see this? And this, don't forget now, this is the end of the month, last trading day. So there's, options jiggly going on and rolling over, and people defending strikes, and on and on and on. This is not any kind of a big options expiration deal, but it's the end of the month. So people have to be adjusting their positions and futures, and also, I don't know so much about it. I've not traded options, so every time I use the O word, I'm venturing into dangerous territory of saying something that isn't correct. But if you know what I mean. We got another minute to go. Well, maybe they're going to actually do something here on the market on close. I don't know. We'll see. They'll pop up right over here. We've got 3 seconds to figure it out. Boom. Oh, look at how that liquidity lifted off. Did you see that? The liquidity that had been piling up here that I pointed out, gone instantly. We've still got 285 up here at 72. Here we go, coming in, chasing it down now. That's pretty funny. Not really such a dramatic reaction, but and certainly not anything tradable from my point of view. So here's our market on close orders. 847 million sell side S&P, 506 million sell side 100 Dow or Nasdaq 100, 180 million sell side on the Dow. And Mag 7 is 169 million sell side. Well, there's a pretty big move there. What do we got? 12 handles? That's pretty snazzy. Okay. Okay, dokey. Well, I will clean up all of my various and sundry levels around here over the weekend. Oh, and I have extra days to do that. Isn't that great? Do some studying about wrinkle bars. So have yourselves a great weekend. Get outside, get away from the screens, do something for your health and your head and your heart, you know. It's really important, that whole aspect, your physiological side is as important as what fancy resolution you have on your monitors and all that is more important, because trading is you, right? And so you need to be firing on all cylinders and sharp and clear, well rested, not on tilt emotionally, hydrated, all those things. All of those things are really important. And where are we? Five minutes, 4 minutes and 50 seconds. And your weekend has begun. Be interesting to see if somebody attempts to put a closing swing trade on or something, or they come jamming in around it and push it one way or another. You could put a squeeze on, who the hell knows? It's definitely sold off. It sold off and sold off some more, so. Boy, IRT is having a problem. So irritating. So irritating. I'm going to close something down here. I don't think this damn thing does me any good. Multi-level R2, I'm going to definitely save that thing. And then I'm going to shut it off. I do think it takes a whole lot of resources. This is just a blank sheet that doesn't do anything. Okay. Look at how laggy that is. 14 milliseconds lag. Why? Here comes the liquidity bouncing in. We've got 2.5 minutes left. We got a big wick down, and now it started a new one, and oh boy, so excited. And then we got a next one going, kicking off quickly. So they're really trading hell out of them now. Absolutely no interest in this type of market. My trading is spotty at best, but you know, here we go. Remember now that the stream is going to be down from the top of the hour, as it is every day. I'll be back at 8 o'clock in the morning on Tuesday. Monday's a holiday, public holiday here, Labor Day, no trading. And every day, every trading day, 8 o'clock in the morning for the pre-market, and then the next week will be interesting, non-farm, et cetera, et cetera. And here comes the liquidity jamming in there. Look at that. Look at how they load the book on either side of it. Market on close orders. Get me out of here. I want a position. There's 674 contracts living at wherever that is. 72.5. I'm never sure what to think about all of that. Will they trade them out? 733 of them, 735. What's going to happen? See if that trades. Boom. Yep, they did. They traded them out. Amazing. Amazing, huh? Little bit of a squeeze here. And I do mean a little bit. No big volume above us, but no big liquidity below us really either. Just that closing swing trade. Well, boys and girls, there you go. I don't know if I got those right or not, but anyway. I can safely say have a great weekend. Get out and do something. I am going to do that. I'm going to take my own advice. My weekends are pretty well set, though. Saturday's all home stuff, mow the lawns, do all that. Sunday I always go for a minimum of a 12-miler, which pretty much knocks me in the dirt anymore. It's now 35 degrees here, which is about 95 or so, close to 100. That makes it tough. Exercising makes it tough on the old guy. All right, so there we go. That's about enough of that for me. I don't know about anybody else, but have yourself a great weekend. Smack a thumbs up on the way out the door, or subscribe, drop something in the chat. That's always nice. If you could use these session levels, those prices, happy to share them. I share them with a lot of people for free. No problem. We'll drop something in the chat and let me know. Wow, I think that's pretty much done it for me for the weekend. Happy Labor Day if you're in the States. Be safe. A lot of crazy going on out there right now. Seems like. Well, have a good weekend. I'm going to be out of here.